The GDP is out. What is the market telling us? What's up, super investors? And welcome to the Nick Rutherford Report. Every investor is going to lose money, but a super investor makes more than they lose by watching the market. So hit that like button, subscribe to this channel, share this with someone who would get a lot of it, because this is the place to be for the financial news that matters for your net worth. Let's get to it. Gold has smashed to all-time record highs. And this is very interesting. There's a cool chart that I want to look at. Here it is from Zero Hedge, showing exactly when the gold decoupled from the gold ETFs, just as the US weaponized the dollar. So it doesn't take a rocket scientist to understand that if you're going to freeze someone assets, everyone's going to look at it and say, well, maybe I shouldn't hold as many of those assets as I used to. And I believe this is why gold and the gold buying and the gold price continue to go up even as the assets come down. So as a super investor, I'm just watching these trends because the trends are what's going to make me money. Now, another trend that I'm watching right here is the dramatic slowdown in the housing market, because this will be terrible news for investors who get caught offside. So it's something to watch very closely. Yeah, there may be lots of inventory in Florida and Texas, but the other active listings in the Northeast are at record lows. So you can see that there clearly is a bubble brewing in Florida and Texas as inventory goes up and up. It's back to the pre-pandemic levels. If this continues to climb back towards when we had a crisis, well, that's something investors are going to want to pay attention to. If they see it, position themselves accordingly. Now, some great data has come out today that I think we should look at. We've got GDP coming in today. The GDP growth comes in unexpectedly light despite red-hot personal spending beating estimates by a record. Now, if people are spending money, a super investor knows that the economy is good. So if we've got red-hot personal spending, guess what? Corporate profits are going to come in pretty good. If corporate profits come in good, well, then stocks are going to go up. So this is what I'm watching. And really, as long as GDP is not contracting, I'm happy. Now, another piece of data that came out right now that we want to look at is the initial jobless claims. Well, they tumbled back to near decade lows. Let me get this chart in front of us. Let's see how this looks. Okay, so you can see it came way up during the plague, and now it's back literally down towards record lows. So if initial jobless claims are not rising, well, there's no chance of a recession today. Data could come in tomorrow and be different, and then I'll change my mind. But a super investor follows the data because the data is what's going to make you money. So let's zoom over to the next thing I want to talk about. Here is my bullish strategy. So if the data comes in good, I'm going to stay invested in good companies, taking advantage of good trends, get them at good prices, and as long as they're growing within a durable trend. One trend we talked about today was gold hitting a record high. So what about next? What is my bearish strategy? Well, my bearish strategy is really simple. When the data changes, if the initial claims get bad, well, then I'll be raising cash, short-term T-bills, put options, managed futures. So what does this really mean? What comes next? Well, the data will come in bad, and I'll adjust my strategy. Or the data will continue to come in flat or positive, and I'll continue to stay bullish. Right now, I'm bullish. And what is the market telling me? Well, the S&P 500 agrees. It's near all-time highs. Look at this. We might have had a big debacle with DeepSeek, but it looks to me like we're consolidating sideways. On the last 12 months, we're up 23%. Now, Bitcoin, let's look at Bitcoin. Bitcoin looks to me like it's consolidating sideways. And as Ray Dalio said, I study the past to predict the future, and a good super investor knows that Bitcoin typically follows the cycle in the past of halving, going way up, then going way down. And we're in that time period where it halves and then goes way up. It halved a while ago, and now it's been on its way up. So we're going to see how long this lasts. But right now, this is not a market that's going down. It's consolidating sideways. One thing I want to point out with all of this DeepSeek stuff, a lot of it is nonsense, because if it was trained on a more advanced model, it may have used some of the more advanced chips. Even if it doesn't need as many chips, guess what? Someone's going to want AI that's smarter than it, super smart, incredibly smart, and they're going to build it. They're going to spend a lot of money building it. So if I look up TSMC, they're making a lot of chips. In December, they were up 57% year on year for their monthly revenue. Year total last year up 33.9%. This is not a chip market that is slowing down yet. Will it slow down in the future and then I'll change my mind? Maybe, but let's look at the data, because a super investor always looks at the data and makes intelligent decisions, not emotional decisions based on the headlines. And then we just watch the market. It tells us what to do. Next, what's the number one stock to buy right now? Click on my bio, follow me, and follow the link to rutherfordwealthreport.com, and I'll share my latest research with you.